For your money time now, as always, we're joined by David Nelson, CEO of Nelson Court Wealth Management. Hi again, David. Welcome back.
Yes, well, thank you. I appreciate it. Love being here.
Absolutely. We love having you here, and you refer to market cycles quite often. So if you could just kind of give us a quick recap of where our U.S. markets are at right now at this moment.
Sure. So big picture, we like to talk about that risks are different depending on the particular part of the cycle that we find ourselves in. Clearly today, we've come off of an enormous run as far as from the bottoms in '09. This cycle has run a lot longer than most cycles would typically run. So it's making us, nervous to say the least. We've talked about as far as in prior programs, as far as we think the downside is greater than the upside at this point in time. But again, that doesn't translate into that individuals out there should not be investing. We should be investing. The key is to know roughly as far as the allocations, where to put the money, what have you.
So as far as our markets are concerned here, how does that compare to some of the markets abroad?
So if we have a chart here, I would like to kind of walk through that as far as this shows the U.S. markets, and again, a little background as far as this is going back to 1997. We had this really nice run, 106% uptick as far as in the market through 2000. Then we had a 49% drop. So from 2002, we now go up 100%, and we drop 57%. And doggone it, we're down below where we were, and then we've had this enormous 300% run here. Now, slide 2 will basically show green is what we just looked at. And if we look at the gold, what we find is that through this part, the correlation has actually been fairly tight. But what we notice here is that there's been a huge change and shift as far as the last 3-4 years, where the U.S. market has done so much better as far as the international market. Now, it's not to say that this trend is not going to continue or continue. It's just to try to point out to individuals the gap. And I don't think most people, if we look at historically, that the markets kind of move in sync with each other, yet we've had this enormous push as far as the U.S. markets. Meanwhile, the international markets haven't done nearly as well.
So what makes up the difference between those two?
So the dollar has a lot of impact as far as on this. The dollar has been extremely strong the last several years. And because of that, again, this has contributed to some of this. So the easiest way to think about it is the dollar goes up, the other currencies come down. Doesn't mean the markets necessarily do, but the currencies do. And so in the U.S., we're basically coming off of the bottom. We did a lot more proactive things than what a lot of countries around the world did. And subsequently, our markets basically took off where other markets were a little slower as far as to catch up. So it's a combination of market cycles. It's a combination of the dollar. And the dollar's been strong. This has taken place. Now, as you maybe saw yesterday, the Dow got spanked pretty hard. The NASDAQ got hit pretty hard. And what we've been talking about is this is all likelihood not going to continue. And our belief is that we're probably in the early part of a pullback, a correction. Nothing to panic about, but people need to be aware this can't and won't continue forever. And so again, we just step back from this and say, for those individuals that are fairly conservative minded and individuals that when they go into the store looking for bargains, I would look at the two of these kind of in the same light and say, which one would I rather put my money in today going forward, one that's up 300% or one that's up 100%?
Obviously something to be looking out for in the future.
Absolutely, very important. And individuals, again, continue to put away the money, but again, understand that there's a difference as far as from a risk-return perspective as far as where we're putting our money.
David, always fun for you to join us.
Thank you. Appreciate it. Thank you.
Absolutely. And of course, if you missed any of the segment, we'll have it available for you on our website, ourquadcities.com.